Hello, everyone. Thanks for joining us today. So I don't expect we will have much people on the show today because it's a Friday night, at least here in Europe, and Friday is very important for traders. But anyway, we decided to do a video specifically about Vaidotas Momentum Score. Some of you have been using this script in the past. And as we did for other scripts that we are sharing on TradingView, we decided to do a video about it. So Vaidotas, my first question to you about the Vaidotas Momentum Score script is, what is it?
Hi, everyone. Yeah, so first of all, let's call it Vaimomo. It will be shorter and easier for today. But yeah, what is it? It's an oscillator, and it is measuring the strength of a trend, basically. You can interpret it in three different regimes, basically strong upwards trend, neutral range bound, or strong downwards trend. And also, as other momentum oscillators, it also can signal overbought and oversold conditions. So what is it? It's the strength of a current price action, simply put. So yeah, I will share the screen now. I'll go to here, and okay, so now I'm sharing my trading view. So I use it in 3 different time frames. As almost everything on my fractal range, because we are doing multi-time frame analysis. So this indicator basically has 3 lines, and these lines will show you 10-day, 30-day, and 90-day strength. It's called momentum score. You can think of it as a strength.
So which one is which? Because you have.
Oh yeah. So everything is in order. So here you can see that 10, 30, 90, and then you will see number in blue, green, and red. So you can this way you can know that blue one is 10, green one is 30, and red one is 90-day momentum score. So it's measuring the same thing. The only difference is that it takes more data. Of course, it takes 90 days, 30 days, or 10 days, but it's a study on volatility.
Okay, very good. I see that you have data marked on the right side, -2, 0, and 2. Why are you marking these 3 values?
Yeah, historically, and I did a lot of tests and watched historical data for multiple assets. 2 and -2 are usually the levels where you can think of it as being overbought if momentum score is above 2, or oversold if momentum score is below -2. First of all, I want to mention, because other indicators exist, and usually people are used to using momentum or RSI or other oscillators that have floor and ceiling. So this indicator does not have a floor or ceiling. It means it can go to as high as it needs to go, or as low as it needs to go. We will go through a couple of historical examples, but I saw it +5 on Tesla and Bitcoin. So keep in mind that, of course, asset can stay overbought or oversold for a long period of time. But for most assets, -2 or and +2 is a good place to start. So when you see that, for example, now QQQ is approaching 2, actually on 2 time frames, you can just see that, okay, so if I don't have a long position, maybe I will not buy now because it's overbought and market needs to cool down a little bit. Of course, cooling down doesn't mean that it will go down. It just means that it's hard to expect the strong move, strong and fast move to continue.
Okay, so for example, in what we are seeing right now on your screen, we can see that, so for example, the red is, so the longest is 90 days. So the momentum is very strong and basically not going down much. But we see, for example, the green one that went down and the blue one that went down. So, so I mean, how would you use it, for instance, in on ES as a trigger to, for example, take a position or another position? Or I mean, how do you view the differences that you have in different time frames?
Yeah, so first of all, let's talk about the direction of momentum, and very good questions. But first thing to consider is whether momentum is going up or down. So now you can see that, for example, short-term momentum was going up for quite a while. Now it reached 2 and it's going down. You could expect it. Of course, I'll change maybe into not futures because now it's a rollover week, but basically it's the same thing. You could expect that. So I'm always looking at where it's going and from what levels it is going to. So the question was about taking positions. So as usually, my answer will be boring and no one should take a position based on one indicator. But now, what I can see. Now let's analyze what I can see here. So the combination of momentum scores and ranges is actually very powerful thing. So market was oversold, especially on a short-term basis. It touched -2. Also, we saw that the downside on MFR ranges is pretty capped. So it gives me a way higher conviction, for example, to go long. But now let's forget about MFR ranges for a while. What is important is to see what the direction momentum score is moving on all time frames. So is it going up? Is it going down? Also, is it going up from oversold conditions or is it going down from overbought conditions? So how I would use it? I would use it as a filter, first of all, because traders need volatility. It's normal. And trend followers, so not mean reversion traders, but traders who tend to join the market, not fade the market. And that's actually what I recommend to do. But need momentum. So you don't want to be stuck in a position if that position is not moving. So that's why it is important to see whether momentum is in your favor or not. But of course, momentum is a velocity. That's why we also need to know how high is it? Because if you see that momentum is positive, it doesn't mean that it's time to simply buy, just because if it's already close to the level of 2 or any historical level that makes sense for that particular asset, maybe now you need to wait for a correction or for market to slow down a little, because it takes a lot of energy for overbought markets to continue moving. So usually what markets do, even if they don't reverse, they calm down for a while. And now I mentioned one sentence that I said that you need to choose the level that is relative for that asset. So how I do that? For example, if you go to, let's say, Tesla, and best is simply to zoom out as far as you can, and you will see that, for example, asset like Tesla, and you see all the major reversals that happen. And you can see that in some point, positive momentum, like I said, on Tesla was +5. And you can see similar values for some crypto or other assets as well. We can take a look, for example, at GME, because why not? Real traders look at GME, right? So I just want to show you that these numbers can go crazy if asset goes crazy. So you just need to know that. So what is a good level? For example, for Tesla, I would use like 3. And if we go back to Tesla, because 2, we can see multiple scenarios where especially mid and short-term momentum was above 2 before the reversal. So this is the easiest way to check the relative levels for the assets. And then how would I trade that? I said that then if ranges agree and momentum agrees, and momentum, of course, is not, let's say now we are talking about long side. So momentum is not overbought, but also momentum is not going down. It's very important. Momentum can be negative. That I can stress, because if momentum reversed at, let's say, close to being oversold, and it reversed, and you see a couple of days that it's moving up, direction of momentum is going up. So if other signals agree, so upside downside ratio, maybe downside is capped on both longer and regular term ranges, then you can use it as a additional signal to buy the asset. So yeah.
So what you are saying is, depending on the volatility of a particular ticker, the momentum bracket will be different. So it's very important if you are using the momentum indicator to at least know the profile that this asset has.
Yes, but 2 is a good place to start for most assets, because of course, because it depends on a trader, because for some traders who trade crypto coins, and I know that there are quite a few of those, for example, they are trading crypto futures or spot coins, and especially the smaller ones, not Bitcoin, because even Bitcoin can be crazy sometimes. But let's say someone is trading things like Solana or other coins, you need to know that maybe for that particular asset, maybe 2 is not a good level, because it can go crazy sometimes. So I'm not saying that in this example, for example, in this chart, I'm not saying that 2 is a bad level. I'm saying that you just need to be aware of that. For example, if you short just because blue and green, for example, is at 4, well, as you can see, it happened here, but the asset is continuing to go up. And it continued to go up until a longer term momentum went go to like 10. So you just need to be aware of that. And you can still use these +2 or -2 as a first signal, because traders, sometimes you need to be quick. So you need to be quick. Okay, so it's +2, and maybe ranges agree that you want to buy that. Then you just quickly zoom out, like I did here. Yeah, you zoom out because nothing else matters. You want to see more, and you see, okay, yeah, now it's kind of 2, but yeah, it was +5. Just keep that in mind. Keep that in mind. And maybe maybe the main point that I want to stress out here is the combination of tools in your toolbox. Same, I believe, with your indicator, Rafael. I mean, you are not using just that indicator alone.
Yeah. The idea of having multiple indicators, multiple data points, is to improve my odds.
Yeah, the goal of this video is, of course, to explain what it is, what it tells you, and then the last thing is how to trade with it, because a lot of people are asking things, when to buy. And then, I start ranting, doing these long rants, because that's the wrong question. Question is not when to buy. Question is what this particular tool is telling you. And in this example, this particular tool is telling you that maybe, for example, here, it's quite interesting, that maybe this particular coin, after a couple of days, maybe, it will be interesting to look to buy, but not like some traders want, to just place a alert and limit order, for example, conditional order, that if it goes to -2, buy. No, don't buy if it goes to -2. If it goes to -2, then check other tools in your toolbox. That's the correct way to use it.
Okay, I'm very interested because now we are taking some freak incidents, because it's very important to be aware of that. But let's say you are trading something that, for example, has been trading uh, in a flat manner upwards. For example, let's say QQQ, for instance, or SPY. I don't know. And could you illustrate in the uptrend we have seen since, I'd say, October 23? How would you have done? How would you have used the momentum indicator, for example, to add to your long? In what instances you would have bought using both the momentum and, for example, the ranges? How would it have be helpful to you?
Yeah, good questions. But then maybe I'll add also trend, because I will show you how I would use it, but it will not be just that indicator alone, of course. So my rule number one, when we are talking about buying dips and holding, for longer periods of time, so more of a trend swing trading, trend following, or active regime investing, like people do with ETFs and so on, when we are holding for months until the regime changes or so. So what I would do is, of course, I get rid of any asset that it's not bullish trend. And some people will say that it's maybe not the not good idea. It's a good idea. For me, risk management is number one. So what we saw here, for example, here, and we are in October 2023, and I remember this trading this period very well, because it was quite a volatile period in futures, and I always trade futures. But basically, we see that the shorts were working and the momentum was going down, and we saw that short-term momentum reached -2. So now, of course, I'm not saying that on that day I did this or I did that. First of all, I don't remember. Secondly, it doesn't matter. What matters is that here I'm definitely not adding to shorts. So one thing, if I'm short, I'm not adding. If I'm not short, I'm not shorting. That's for sure. Now, when momentum is reversed, and we have a couple of days of it going up, sorry. We have a reversal, it's still negative, but like I said, it's not a problem. One thing that is missing is, of course, bullish trend. And we had this quite important flip here. So it went bullish, and actually it's flipping from 0 to a positive number, which is good. So here I would buy if, and again, if ranges agree. So of course we see that ranges disagree. Now we need to use this democratic principle, maybe, because now I'm talking about ranges, trend, and momentum. So you will miss a lot of moves if, for example, you will wait for all 3 or all 4 of your tools to agree with you, but you need at least a majority. So a lot of people would buy here, and they would be right, just because downside was capped and upside downside ratio agreed. But like I said, for me, I always respect the trend. always respect the trend when I'm not day trading, but have want to initiate position. So for me, trend has the most weight. Then what has the second more weight is always the ranges. Momentum score is basically the not the last indicator, but momentum score is something that I want to see. Usually, if this move has steam, has enough strength to continue. So yeah, basically the only way where I will not initiate a position based on momentum alone is if it's overbought or oversold, and I want to go to that direction. So I mean, if it's overbought and I want to go long, I will not go. I will wait. But I just want to see the momentum agreeing with me. So and agreeing with me is the direction. These levels just show you that okay, if it's somewhere in the middle, it means that this move can still continue easy, because when it's overbought, it takes a lot more energy for it to continue. So that's why it's always better to wait. And we can see plenty of examples, because usually whenever this, and it doesn't matter which time frame we are talking now, usually whenever these go above 2, for example, we have some dips. And that's why I know, Raphael, that you like this indicator a lot, because it's this indicator is actually very visual. Very visual. It means, oh, okay, we see plenty of spikes above here, so maybe we don't trade. And for some people, these visual lines help a lot. But yeah, momentum is very visual. If it's inside the channel, it's good. If it's not inside the channel, maybe you need to wait. Yeah, that's the easiest way to use it.
Yeah, basically, so the way I use it is the ways I use it are plentiful. So first of all, if the macro agrees, if macro agrees that there should not be a crash, I will usually take a stab at any retest below -2 on the one that are not crazy volatile. So, for example, all the freaks you showed before, like Tesla, etc. Of course, I will not focus only on -2. But for example, like QQQ and Q, SPY, etc. Anytime we get there, I'm very, very interested. And of course, I'm going to use the range to decide, but I will be a deep buyer when this happens if macro agrees. I have also added this momentum for different time frames into my buy the dip scripts. So basically, I don't need to think. It's combining all my scripts into only one that is triggering when the high probability is there. So these are the most common ways I'm using this momentum indicator. So that's why I wanted you to show QQQ, because you, like Vi say, it's very visual. You can see. If you know there will be no crash because macro, the -2 looks like a good bet. You can see it happened at least 2 times in the past year and a half.
Yeah, and we have quite a few obvious scenarios here for those people who buy bearish trends, because I tend to wait. That's what I do. But if you buy bearish trends, I mean, here was a perfect example, because oversold conditions and almost capped downside on ranges. Same here was perfect example of being the downside capped oversold conditions by the dip, but of course bearish trend. So I know that some people they say, yeah, of course I want to catch the reversal, so I will buy bearish trends, and it's fine. I'm not saying that you shouldn't do it. I'm saying that I am not doing that. Now regarding macro, honestly, I would fade macro without any emotions. I don't believe in that thing, but well, I mean, from my uh, perspective, and where all these people who talk macro, yeah, I mean, they always say that there will be a crash or there will not be a crash, and it matters nothing. I mean, no one knows, first of all, but secondly, markets are not following macro. That's my opinion. I know that now I will get a lot of heat, but I will follow the signal all the
And
time, every single day, and I'm a day trader mostly, so of course when it comes to news, the only thing is okay. I know that Fed will release something or inflation will be released, so I don't trade. But I mean, news are released. First 5 minutes have passed, and then I do what I did before. So basically, I don't care what number is. It can be good or bad. All I need to know is that that number will come out. It means that for the next 10 minutes there will be volatility. I want to stay out of, and that's it. That's my macro. My macro begins every morning watching in the economic calendar and deciding, oh, today at 3 p.m. I will not trade, but at 4 p.m. I will continue to trade. That's all.
And Vai, regarding, for example, let's talk again about QQQ. So, for instance, let's say you bought the dips anytime you had the -2 on the
Yes.
10-day momentum score, and you are okay. So we go back to bullish trend, and you hold. And what would be, for example, no, sorry. Let's say my trigger is the red, so the one that is 90 days is reaching above 2. So let's say 2.5, 3, you know, based on what I've observed from the past. So let's say I unload there. So would I be correct to assume that, okay, I unloaded there. Now the red, so the 90 days is pointing down. So let's say, for example, after March, you know, between March and April, you had a top on the red, and July and August of last year, you also had the top on the red line for momentum score 90 days. So you unloaded there. Let's say by luck you timed the top. Would you say that it's a good idea to wait for at least the red line to finish the pointing down before you initiate a new position in QQQ? So you wait for
yeah, good question, because when you started asking this question, I was afraid that you will ask, is it a good idea to short? So
no.
Luckily that's not a question. Yeah, so first of all, getting closing position partially or in some cases even fully is a good idea. Now, regarding adding a position, so I wanted first of all to stress that momentum is not a indicator of reverse. Momentum can go down, but assets can stay in range or even grind higher, but it will just do slower. So yeah, when momentum reversed, so let's say red line reversed, it's a good idea to wait for it to start sloping up again. But keep in mind that you need to watch faster lines as well, so blue and green, because red one is slower. So when I would add to a position or reinitiate again, so let's say I got rid of my position here, what I actually want is again, and I will repeat myself, but I'm more interested if asset stays in bullish trend. I'm more interested in a upside downside ratio in a range, because it's already bullish. I know that I'm on the right side on the of the market, at least for now. It means I'm following the trend. So now I want to reinitiate the position, not necessarily when red line will reverse, because I mean it can happen after a month. But I can add back at least initial size when the upside downside ratio is hugely in my favor. Let's say upside downside ratio is above 2 at least on a regular range. Of course, if you get cap downside, even better. But yeah, I would then initiate at the upside downside ratio, because my biggest concern here was to follow the trend. So now we know that it crossed bullish lines. now I know that the trend is bullish, and I actually know that the trend level is still quite far away. It means market is really bullish, not close to the trend. It's really bullish. Now I want to go with the trend and initiate it when the range agrees with me again, unless, and now I will go back to the topic of the video, unless short-term momentum is also sloping down. If blue and green, also not only red, also is sloping down, then yeah, maybe I would wait, because keep in mind that red line is slow, so it being slow is actually good and bad. Not bad, but there is a black and white thingy that it's good because the signal is strong, because I mean it's uses a lot of data, so if that agrees is even stronger than short term or lower term. But the downside is that I mean it will not react quickly to changes. So if it actually if it slopes down, so momentum is slowing for quite a while already.
So so you can see, for example, in August of 23, for instance, you're starting to see the long-term momentum go down, and even though you had the blue, so the very short-term one, kind of bottoming and trying to get back up, it's not going back to the highs yet. So
No.
because you need time for the red to, let's say, recharge its energy. Is this the way I can understand it?
Yes, correct. And also another point of view, another point to consider is, look, that even though the fastest momentum started going up here, the green line also was going down or then staying in range. So basically 2 out of 3 momentum indicators were signaling that wait, we don't see a good reason to buy.
Okay, yeah, makes sense. Makes sense.
Yeah, so that's why, I mean, there is a reason why, for example, especially in the beginning, we had questions on Hearst, on ranges, on everything. Why you have like regular longer term, then why you have 3-month Hearst, 1-year Hearst, same with momentum, why you have 3 lines instead of 1, because that's how I want to look in into the markets. When it comes to ranges, it's fractally, but here at least multi-time frame, because when it comes to ranges, it's not like 2 or 3 time frames. It's literally all possible time frames you can think of. I'm not joking. That's the beauty of fractal math. But when it comes to other indicators, I also want to see what's going on at multiple time frames. When I'm down, I mean, same with when I'm day trading futures, I have the DOM, which is all current order flow tick by tick, but at the same time, I want to see maybe 2-minute chart and a daily chart just to know the context. So same here. I want to know, not only choose some random period like a lot of people do and have one line of momentum and say, hey, momentum is going up. No, I want to have at least couple of these with periods that make sense. And here it's no secret. It's 10-day, 30-day, or 90-day. And these make sense to me. Couple of weeks, like then 6 working weeks, and so on. So I just want to see the changes there. And I want the majority of them to agree with me. Maybe that's the best way to put it. So in the case of momentum score, maybe 2 out of 3. Yeah.
Sorry, I'm on mute. Yeah, I was saying we have a question from Hani. So we are kind of addressing the point here, but maybe we can hammer it down again. So Hani was saying, I understand the various periods, but I am not sure how you reconcile them for buying or selling. Could you elaborate? So I would say more on this,
Oh,
as sometimes The 10-day is signaling a reversal, but the 30 and 90 are not.
Yeah. So first of all, the question was how to use it in buying and selling.
It's more about time frames contradicting each other.
Yeah.
Sorry. So
Yeah. So
10-day is saying something, the 30-day is saying something else, and the
okay.
90 is saying another thing.
Okay. So first I'll try to give a general answer, then I'll try to explain how I will use when trading. Yeah, but general question is that if longer term momentums are agreeing with you, let's say you are bullish, but short term momentum is signaling reversal. If I understand that's the situation. So if you have a position, you can still hold it. I would reduce some. If you don't have a position, I would wait and don't buy, because how it's signal buying and selling, I would still be concerned that, and I know how this indicator works, and you can see it from a chart that usually that's not the case, because if a short-term momentum is signaling reversal, it means you should be long from before, because it means it was positive before and the move was positive before. So now I will assume that there is a long position. 30 and 90-day agrees with long position, so it's still sloping up. But the blue line, the short-term momentum, is signaling reversal. So I would get rid of at least 50% of the position because of that. And of course, I would check what ranges are telling me. So upside downside ratio there. But let's say, and ranges also telling me, yeah, maybe upside downside ratios are not cool. I would get rid of, let's say, 50% of the position, because it's a short term momentum. It's faster, so it's good. It's good in a way that, yeah, it can signal reversal. Now the question is, of course, will that reversal happen? Because no single indicator knows the future. It's not a holy grail, but it's a good signaling reversal. Same for shorts, but that's why first I wanted to give general, but I actually gave the answer how I would trade, because here it all depends if position exists or not. If you want to initiate position, you want to first, you want short-term momentum to agree with you. There is no way, and actually good that I now mention it. There is no way that you are entering position when the short-term momentum is not agreeing, because we know that short-term momentum is fastest. So if you want to buy, but short-term momentum is signaling reversal, it means now market is not going up in a short-term basis. Why would you want to buy it? So when these are contradicting, I would look in this order. Don't go against short term. Then rule number 2 would be what I mentioned, but let's say 2 out of 3 should agree with you. And yeah, basically that's what I would look, because there is a big difference if, for example, you want to go long, but let's say short term and mid term is agreeing and long term is not agreeing, or let's say short term is disagreeing but others are agreeing. Why there is a big difference? Because if the fastest indicator is not agreeing with you, there is no way you would buy. Yeah, so for shorts, just reverse what I said, but I hope it's clear.
Okay, let me check if there are other questions. Annie, if you are still there, feel free to let us know if you need more info.
Because think of, yeah, and while you are checking, I can continue, but think of it this way, that shorter momentum is literally saying what is happening, well, in the last couple of days, because it's fast. It's couple of days, or sometimes even one reversal candle can change the number. Not drastically, but it means if it's not agreeing with you, something happened. Some red candle happened, or market slowed down, because remember that it's momentum. Market doesn't have to fall for momentum to fall. Market just needs to stop and be in a range, and momentum will go down, because that's the point of the momentum. We use other tools for direction per se. So, but if short-term momentum is not agreeing with you, it means something happened. So either one of the two in the case of longs. One, market is going down now, I mean in the short term. Two, market is stuck in a range. Yeah.
Okay. Okay, I thought I was on mute. Actually, I want to share my screen. I will give one example on how I would use, because via this way of using it's his indicator. But I will share how I view it, for example, in let me move this. Okay, good. In NQ, for instance. So, so for example, here, so let's say you saw that the long-term Momo was in the vicinity of value that you consider a top, and you exited the position. You either shorted for other reasons, or you just decided, okay, I'm not gonna do anything until I see at least a 2 here for the short-term one. Okay, so you could have decided not to trade for swings because you are long only, and that's your goal. So here you take the bet for the +2, for the -2. Sorry, you take the bet and you are buying the dip on NQ. And then you watch, and what you see, like I said, the short-term Momo is starting to point up, the medium-term Momo is starting to point up, and the long-term Momo is starting to point up. Okay, and okay, now you have the short-term Momo reaching +2. So you are saying, okay, maybe on the short term we will get another dip. So you unload a part of your position. Then it started to go down, and what you are seeing is the long-term Momo still pointing upwards, the mid-term Momo still pointing upwards. So as soon as you see the blue one going down, you're thinking, okay, I'm going to buy this dip. I'm going to add there. So I'm watching for this blue to go. Actually, I'm thinking 0 all the time, but and I'm checking the range. What is the range saying when this dip is happening? So if you combine the fact that long term is pointing upward, medium term pointing upward, you're thinking this one is a dip, and range agree. This is where you add. Okay, and still pointing upward, and the way you can think about it is, until I see the green starting to reach my target, could be 2, could be 2.5, could be 3. There is no reason to unload my entire position, and you will try to add on any dip that you get. So this is, for example, so here, if you are long only, let's say you only long NQ, so you are not participating. Here you are starting to participate. Here, any dip you are buying, because green is still pointing upwards. Every time you may use the red also at the dip. And here, for instance, you reach the top and you unload and you wait. You wait for the same thing to happen. You wait for -2, then you take the here you are buying the dip, and you are starting to think the same way you are thinking here. Okay, so now we have red pointing upwards, we have green pointing upwards. Anytime you have the blue going to 0, I'm adding to my position after unloading some here, and you just keep repeating the same process. Of course, again, you need to check the range agree or not when this dip is happening. But as long as the long-term momentum is pointing upwards, I mean, there's no reason to unload your entire position.
Yeah.
So
can I interrupt for a second?
Sure, right.
So first of all, yes, absolutely great. But all of your examples that are correct, but all of your examples have one thing in common, very important thing, that when you show these examples, ranges agree with you. upside down, because whenever you want to buy, you show, okay, -2, or you see that basically price is at the bottom of the range, and it's very important too.
Exactly.
Yeah, so continue. I just wanted to stress that that's exactly what I'm talking about. You need ranges and trends to agree with you, and when you have this combination, then it's very powerful. Yeah, sorry, now continue.
Yeah, it's I mean, yeah, totally. I mean, I will not take a decision only based on one indicator, that's for sure. I mean, it should be a combination. So again, what we are trying to do with MFR is we want to improve your odds. So we decided with this platform to first not increase prices. We don't increase prices. All we keep doing is adding more stuff for you to improve your odds. We added recently the IV rank and IV percentile. We shared all our scripts that we are using. So the one Vi was using, the one I was using, to our subscribers, and we will keep adding this kind of value. So this is what we want to do. We want to improve your odds. So I mean, in my opinion, the way you introduced your Momo was good. I mean, then again, you have to do the work. I mean, you have to walk the walk. You have to take this this indicator. You have to monitor. Okay, these are the tickers I usually trade, and how do they react with Momo? What are the values that matters for these particular tickers for short term, medium term, and long term Momo? What happens when we have cap on the range, etc., etc.
Yeah, maybe, now I just got this one thought that maybe I will share how this tool was born. Because, for example, when I was working on ranges, I wanted some risk profile for market timing to let me know what's probable based on upside or downside. But when I was working on Momentum Score, well, Momentum Score is a final product, but here I was trying to create a tool which actually helped me to avoid positions. So now I'm using, of course, it's exits avoidance, but basically Momentum Score was born when I was building a tool for which actually goal was to help me avoid positions. I had an idea for this tool not to help me enter positions. The goal was to have a tool which tells me, no, don't do that. So that's because if I had to say, I'm more of a trend follower, so I'm more of a momentum trader. Of course, as a intraday futures trader, we all know that we trade what we see. I can be long and short 20 times on the same day. But when it comes to a portfolio, and that's what this tool is. So portfolio managing, risk managing, and so on. I'm not a market fader. It means I want to go with the market, not against the market. So all these tools are more meant to, that's why, for example, ranges and trends tell me now it's time to buy. Momentum Score's goal was to tell me that maybe don't buy yet, or something, or sorry, maybe don't buy yet, or maybe don't buy already. It means it's already overbought. So something. So now the final product, yeah, I use it like I explained it. It can be used not only for that, but I just wanted to share the story that I was creating a tool to help me avoid trades, not to help me initiate trades. So that's how Momentum Score was born. Yeah, just that.
Yeah.
Because I had in this model and this everything MFR shares, I call it a model because I use everything in combination, and I try to stress everything why Hurst is important, why everything is important. But so today I will use the word model. It means what MFR data points, all data points that we can find. So this model already had plenty of tools to help time and initiate positions. It had plenty of tools, trends, ranges, also even Hurst exponent, which is so powerful. I can stress enough. People don't talk about that. And I mean, again, but there was a lot of tools already to help initiate positions and to calculate probabilities, which is Hurst and ranges as risk probabilities and risk profile. But one thing was missing for me was something that just that final touch where it says, okay, but maybe wait a day or two. And the momentum score was finally, when I added, because it's the latest edition. That's why it was never on a website and so on. But and then say, okay, finally I have something in a toolbox that can just tell me that, okay, everything looks good, but maybe sleep on it. It means wait a little. Yeah. I just wanted to share. Yeah.
Very good, man. Very good. I mean, I've told you since you shared this script with me. I mean, it's mind blowing. It works very nicely if you can integrate it into your process.
Yeah, and like jokes again. Again, don't for people who are listening, don't take it directly because it's not advice or that, but it's a joke. Now, disclaimer: it's a joke. But like you said, for example, when you see a cap on longer and regular term ranges at the same time with momentum score of -2 or +2, basically it's a time when you can maybe trade with a lot higher conviction, because everything agrees with you that now ranges are capped, momentum is, let's say, oversold, and market is back to, let's say, from bearish to neutral. Oh my God! I mean, in my book, it's called the A+ setup, and I mean, everyone knows what to do with A+ setup. So, at least no, and not everyone knows. Traders should know what to do with A+ setup. So yeah.
So Hani said one more question. I find it easier to use with QQQ than something like IWM. So I guess it's all the freaks, right? IWM, Tesla, crypto. Maybe they are more volatile. Maybe that's
why. I would say that it's again, and why Hurst exponent helps a lot. It's more of a profile of an asset. So not only QQQ, of course, but I will say this: the least choppy asset is, so the more trending asset is, the better these tools will work, because, as I said, these tools are for trend following. If instead of trend you get a chop, of course it will be way harder to follow. So for chops, and during our last season, let's go, before our break last year, I was talking a lot about how to trade chop. Mostly use ranges. Just if you notice that an asset is choppy, basically then trade ranges. That's what I can say. And by trade ranges, it means don't try to hold, because I mean, you will think that you caught a good trend, but actually trend is not there, and next day it will come back on you, and you don't want that. So buy low range, end of a range, and if you manage to go to the high end of a range, get rid of that. That's it.
By choppy asset, you are talking about assets with a low house value on the
yeah. But people who look, yes, but people who look into charts a lot, they will notice choppy assets also, because I mean it's choppy. It's in some sort of a choppy range.
Yeah. So to answer,
but yeah, Hurst tells you a lot. Yeah.
To answer Hani's question, so why you are noticing QQQ is maybe easier to trade with, to use this indicator to trade QQQs and IWM is because QQQ is the most stable trend. So that's why.
But and not only bullish. I mean, both up or down. QQQ. When QQQ moves, when you catch a momentum, it just goes. And why? Because momentum is there. In some assets, momentum is not there. Or even if momentum is there, like in IWM, after 2 days it will reverse and it will not be there anymore. So yeah.
For those who are using our website, basically just check the Hurst column for the 1 year data. it will give you at least an introductive idea of, okay, is this asset at least on a 1 year basis trending or not? So just to get rid of the ones that are very low 1 year first, if you want to buy and hold. But of course, if you want to do range trading, a choppy asset, like Vi said, just use the range, and in that case, you don't care about.
Because, for example, think about mean reverting assets, and the biggest mean reverting asset is, of course, volatility. So what I want to say now, think, let's say, about VIX or any derivative, whatever, VXX, doesn't matter. When you look into spikes that happen in volatility, you think that trend following would work quite well, because, you know, when there is momentum is huge. VIX can go from 20 to 60 and then back. But actually, because it's mean reverting, there is no trend to follow. Well, that's how people go bankrupt. They see trend down and then they short, and there is this apology video of a guy on YouTube who burned his fund shorting volatility. But what I wanted to say, that mean reverting assets, there is no momentum. Even if there are spikes for a couple of days or so, there is no momentum. And if there is no momentum, you can't use trend following momentum strategies on it, because or momentum strategies on it, because you need to determine, you need to understand, okay, I'm trading SPY or Qs, this thing is trending strong, or Nvidia or whatever, and now I'm trading some stock which actually is moving from $15 to 20, but is doing it multiple times, 15, 20, 15, 20, 15, 20. In between 15 and 20, and don't laugh, there are plenty of stocks like that. 15, 20 is, of course, random number, but range. And it does it a lot of times, so you will say, hey, between 15 and 20, where is the trend? No, it's not. And if you don't catch it at the bottom, and if you don't sell at the top, which we all know no one will be able to do consistently, then there is no momentum for you. No momentum. It's a range bound. And it actually came from a pit. So from long time ago, when people were trading in the pits, both futures or stocks, because some people were trading breakouts of the ranges, and some people were trading range bound. It means like bouncing basically inside the range. So you need to learn how to understand which asset is which, and not only which asset, because same asset can be trending 1 year and range bound another year, and you need to understand that. And it's not actually that hard. You just need to see, zoom out and see what's going on, because IWM, good example. IWM, where if you really zoom out, so don't look at 1 week or even couple of weeks. Zoom out, chart of IWM for a couple of years. Well, I mean, you don't need even to have things like Hearst or whatever to understand that momentum is, the trend is not there. I mean,
well,
it's not.
At least small caps is the trend, but only in a specific macro regime. I mean,
Yes,
they trend like
exactly.
very hard, but
Yeah.
I think it's a reflection.
Yeah. So yeah, and IWM is just a random example that
Yeah.
you were mentioned, but there are plenty of those. So of course, I mean, if you caught a reversal in Nvidia, it will be a lot easier for you, for example, compared to if you caught a reversal in IWM. Because if you caught a reversal in Nvidia, let's say somewhere at the bottom, you could, I don't know, quadruple. But IWM, when you have plus 10%, then goes back, then plus couple percent, then goes back, and you will see the trend is not there. It's just not there.
Okay, very good. Okay, I think we are good. I'm just checking one last time if there is one more question. Yeah, I expected not a lot of people to watch, but at least we got some. I hope you guys will watch again this weekend. I think it's a very good indicator. And again, I mean, you need to use it. You need to check it. You need to zoom out, like he's saying, find out the tickers that for which it can be very useful.
Yeah, maybe
So,
three things. Yeah, like you said, first of all, zoom out on any asset you are interested in to see what happened in the past, because maybe you are trading some asset where maybe using +2 is not best. Maybe you will decide that you will use +3, maybe. But like I said, +2 and -2 is good for majority of assets, especially most liquid assets. Second thing, remember that it's a tool in a toolbox, not some one-hit wonder. You can, I mean, it's a tool in your toolbox. And third thing, as always, remember that my fractal range goal is to help you manage risk and to help you avoid losing money. So before taking one particular tool and using it to come up with some trading decisions. So actually, before asking a question how to buy something or when to buy something, think about what the combination of all the tools that I use and my view is telling me. So keyword here is combination and risk management, and then you will succeed. And not only about us or MFR, but in life, especially in financial markets or so, you should be asking usually not when to buy or when to sell, but how to create my own process that I will be able to use for a lifetime. And of course, that's what we're trying to help you with, to give you tools and to encourage you to use those tools to create your own process.
okay,
Because
very
my
good, Vai.
process is, I mean, every single day I trade futures using the DOM. And then I swing trade using options, using MFR tools. This approach, what I'm doing, will not be suitable for everyone. And we already know from our users and from what people are telling us that there are dozens of ways to use our tools to help you in your journey. So find your own way, and then when you find your own way, let us know. I'm always interested and willing to learn about new ways how to view markets. So that's the whole goal.
Okay, perfect. I think we can end with this. So thank you, Vi, for sharing this wonderful tool. And please, guys, feel free to send any message if you have further questions. I mean, we are always here. We are always replying to every question we receive. Thank you.
Thank you.